As we turn the page to 2024, what are some of the key trends that you anticipate really impacting the insurance industry?
Well, the industry overall, I think, has, handled, the markets really well, right? It's what they do. It's why it's adjusted. That's why the E&S side of the business has really grown, right? Because business has moved out of the admitted marketplace where they can't adjust to quickly changing effects, such as weather or climate or whatever you want to call it, or, hurricane risk. I think wildfire, one of our greatest examples of, well, that never happened before. Oh, it happened 2 years in a row, and the admitted market can't really adjust quick enough from a rate perspective, from a filing perspective, and so on. So that business starts to shift dramatically into the E&S space. I see that continuing, right? I think that's going to be a trend because the E&S space has gotten bigger, it's gotten more capitalized, and so it's going to be able to handle more. And I think you'll see that continue, which, obviously that inures to wholesalers' benefits. So I think that should continue in 24. I think clearly the continued value of the MGA, program administrator, whatever you want to call it, play, I think will continue to grow. Right? There's a lot of expertise out there that wants to take advantage of that, and so I think you'll see that continue, the growth of it. We clearly have several plans for new programs within our program group that are already well down the developmental plan that will start in 2024. So that's a really key development that we'll continue to push because we see ourselves as a huge player in that business long term. Right? I think us being a $5 billion program player is not out of the question in a period of time. So we'll continue that. I think you'll see the property market still be a very difficult place. Like we mentioned, I think a little bit earlier, it may not be the extreme hard market that it was, but I don't see it getting softer. And maybe in some places, but for the most part, tough to place business is going to continue to be tough to place business. And that market is ever evolving with entrants coming in, capital coming in and out of it. So I can see that as still a very large growth opportunity for the company. Personal lines, for our company is a nice sized business. I could see that being a five-timer of what we are today. And that's just because the same dynamics that we talked to earlier. It used to be all standard lines business, and now it's really getting pushed in many states into the E&S market, and I don't see that changing. I don't see it reversing course and going back the other way. So it's something we have to focus on. Casualty, which is probably our largest product line across the country, is still, tough accounts are tough accounts. And, I think if you look at what some carriers and a lot of carriers are saying about their loss development on the years prior to COVID and the pandemic and the shutdown, or whatever you want to call it, that development is getting pretty severe. So I don't really see, I can't see how the market is going to just soften relatively quickly. We could definitely see some leveling off, but accounts that have challenges, the accounts that have loss issues, those accounts are still going to get underwritten very, very tight, and companies are going to be looking for an increase in rate on those things. So still have some wind at our back, as an overall industry, and I don't see that changing in 24.